The money you are putting in the bank in the form of savings or in your checking account, have you asked yourself if you are making compounding or if you are making simple interest? What is the rule of 72? They say if you divide 72 by the rate of interest your bank is giving you, that tells you how many years it's going to take that money you are putting in the bank or the investment, how many years it's going to take to double.
This is one of the great reasons why I am excited to bring more people from that offer different things to come on the show and talk about what they have to offer. Welcome to our studio session. I'm introducing to you today Mr. Samuel. How are you doing?
Very well. Thanks for asking.
I think people will have a lot of questions, and I have few questions for you, right? But
Okay.
I see the passion that you're excited about financial advising. You told me that one of the things you offer is that you offer financial advising.
Correct.
Okay. So because we like on this studio, I'm really talking about how people the best way to share and showcase what you do. Can you tell me a little bit about what you do?
Licensed financial and insurance advisor, licensed by the provincial government. And what we do, me and my team, is we educate middle class family on strategy on how to grow their wealth, on how to save for the raining day, because we have found out that a lot of people work hard for their money, but unfortunately, because they are not taught about financial literacy and strategy, their money doesn't work hard for them. And statistics Canada have said it that when people retire at 65, 67, most of the time they don't have enough money to retire and they fall back on the system, because come to think of it, CPP, how much is CPP paying retirees right now? So when you put all these things together, it's so imperative that financial education and financial literacy have to be taught, have to be, put out there so that people are better prepared for retirement and better prepared for how their income that they are making, that they can grow that income so that during retirement, they don't fall back on the system and find it difficult to retire. So that is where we come in, where the bank does not offer financial education. Me and my team, we are on a mission to educate North American family, not just in Canada, but in the United States, on how they can, while they are working, make their money work hard for themselves by following our three philosophy. And what are those three philosophy? We have number one philosophy is multi-handed income. Most of the time, people are fixated on single-handed income, which is based on their skills and hours. And as you know, we only have 24 hours in a day, and you can only do 8, 10 hours maximum, 12 hours a day, and it's just you. Single-handed income can take you not too far, but multi-handed income that is based on system where you have multiple people working and bringing income, that can make you have time freedom and financial time freedom and money freedom. So that is what we teach. Then another thing for financial security, we educate North American families on how they can save 10% from their net paycheck, understand the three rules of money, which is compounding working in their favor. What about the risk? Wherever you put your name, is it risky where the money is being kept? And also the tax, when you are taking out the money, are you going to pay a whole lot of tax? Those are the three rules of money, and that will help North American family to achieve three goals. And what are those three goals? Income protection, income replacement, and generational wealth. So when we talk about income protection, if, for instance, somebody is not able to work for a couple of weeks or months and he still have to pay the mortgage, pay the rent, put food on the table, how is he going to get those money to pay all those bills, take care of those obligations? Is that 10% that they are keeping aside that is going to take care of the challenges that will definitely come down the road? If your car breaks down, how are you going to replace the car or replace the engine? So it's whatever you save today that is going to save that family or that individual down the road. Then we talk about income replacement. At 65, 67, we're going to retire. And it is not the same amount of money that you are making in your working days that you'll be making when you retire. The money, the income is going to drop. What are you going to do to replace that income that has dropped? If you are spending $4,000 a month taking care of your family, when you retire, you will not be making that $4,000. You will be making 2,500 from CPP and old people security. Now you have a leftover of 1,500. How are you going to replace that 1,500 if you want to maintain the same lifestyle that you had when you were working? It is the 10% that is going to help you replace that 1,500 that you will not be making when you retire. Then the third goal is generational wealth. We can either leave two things for our family when we are no more around. It's either we leave them with wealth or we leave them with debt. And it is that 10% that will make us to be able to put something aside when we pass away, or even when our family wants to inherit our ad-earned money or ad-earned property or whatever it may be. And we know in this country, you pay probate tax, you pay inheritance tax, and if you don't have that money kept aside, how is your family, your loved ones going to pay all those tax when you pass away? So saving that 10% is so crucial to take care of these challenges that will definitely come down the road. Then the last philosophy we'll talk about is peace. Peace can only come when you have financial security and you have multiple sources of income coming in. And that is where self-development, that we can always become a better version of ourselves. A lot of time people always think of who they are now, forgetting that they can become a better version of themselves. And our philosophy is self-improvement, personal development. They say we are the average of the 5 individuals we hang out with. And they say environment is more powerful than willpower, because if you are in the wrong environment, that environment will not allow you to grow. But if you are in an environment that that encourages you, that makes you think outside the box, that is the only way you can become a better version of yourself. People take to spirituality, they go to church, they go to mosques, they do yoga, they do meditation. Why? Because they want to become better human being, better citizen. They want to contribute to society. And that is the only way we can become a better version of ourselves. So this three philosophy, we'll call it the new art of living, because we have found out that the way we have been doing things in the time past has not already taken us to where we want to be. But this three philosophy is the only way we'll be able to achieve time and money freedom, financial security, and peace. I came to this country 2006, and then since when I came to this country, my wife was pregnant with my first son, Ethan, and I just have to get the first job and provide for a pregnant wife and the baby we are expecting. So for 12 years, I worked in Anasis Island, you know. Then I've done various jobs, then I've done businesses, you know. I have a cleaning company when I first came, and from the cleaning company, I set up buying cars, dismantling cars and shipping to Nigeria, doing export. Then I find out that at the end of the day, all these jobs, all this business is just my two hands. And that is single-handed income. And I realized that if I really want to make money for myself, the only way I can do that is to duplicate myself, create a system. Then I now stumble into this opportunity of multi-handed income in the financial service industry. We are just like the platform that I belong to is like the Best Buy of the financial industry. We don't have a product of our own, but when it comes to mortgages, when it comes to RESP, when it comes to retirement savings, anything about financial industry, when it comes to life insurance, disability insurance, critical illness insurance, that is what we do.
So you got in because you were looking for a second way of making money.
I got into the financial business because I want a system way of making money.
For yourself or for other people. For example, I got into engineering because I initially I was good at physics. Right? I was good at physics. I was good at math. I was good at chemistry. Chemistry is not a lot in mechanical that I did, but that was why I got into mechanical engineering. So I became a mechanical engineer. You meet somebody that educates you about financial, then you got interest into the financial services, and from then you you see there's need, or how did you personally get into this field of financial education?
Yeah, how I got into the field of financial education is that I was given the financial literacy, right, by an individual who helped me to save and grow my money, and at the same time helped me in a way that I could pay the appropriate amount of tax and make compounding interest work on my investment, on my savings. And I now find it very useful that, you know what, this same education and this same strategy that I'm using to grow my money, there are other people out there who doesn't have this same education and this same strategy. And I felt that, why don't I spread this message, this mission to other people, so that when they retire, at least they will be able to build something for themselves to retire, instead of retiring at 67, 70, 75, and going back to work looking for menial job to do here and there, because their retirement income is not able to take care of their family or their needs. So that is why we are on this mission, me and my team. We're on this mission through the system that we have, educating North American family, both Canadians and America, on income protection, income replacement, and creating generational wealth for their families.
Why do you think a lot of people don't follow the three rules? Is it because they are not financially educated, or why do you think a lot of people don't are not aware of these three rules that you were mentioning to me?
A lot of people are not aware of it. One, because they have not been exposed to it, right? The people that are exposed to it are the ones that are utilizing it, and those are the high net worth individuals. They have portfolio managers, they have financial advisor through the bank, because if you have 500,000 to a million and above, the bank will be the one calling you to tell you where to put your money for your money to grow. But the middle class doesn't have that privilege, and that is where we come in.
10% for some people is still a lot of money, right? On a consistent basis. A lot of people actually, the money that they are paying them, they can barely pay their bills. I have been building my business. And right now, what is important to me is not saving 10%. I'm being directly with you. What is important for me is investment into a business that I see potential. I see potential in it. Of course, there is always what is the chance of failure? What if you invest everything in it and it didn't work out? So if you are putting 10% aside, that could have been your fallback, right? But at the same time, depending on your economic level and how fast you want to achieve a goal, that can affect the way that you are doing your savings. How many, for example, how many percent of the money that people put in their, say, I opened a financial in like insurance right now for my family with
TFSA, or so you open an account, the TFSA account.
right now. Let's go with the insurance.
Okay.
Say I get an insurance plan right now for my family for life insurance, and the insurance plan is $100 per month. How many percent of that actually goes towards the compounding? You talk about the compounding, because for me, I don't think money doesn't come out of the skies, right? When you put money into an insurance company, the money needs to, like, something happen to that money for you to get, oh, your insurance is $10 million, or your insurance is $1 million, right? Coverage. That coverage comes from something, right? So my question to you is, how many percent of my money, first of all, where did the money come from? Let's say I get I invest $100 into my insurance, where does the money come from? The money that the insurance companies pay me, where does it come from? And how many percent actually goes towards the multiplication that you are talking about?
Okay, let me answer that question. Insurance company, right? When you put, say, take for instance, you put $100 into an insurance policy, right? Before the insurance company will insure you, probably it's an insurance for $500,000 or $1 million, and your premium is $100. That $100 per se goes into that $500,000 or $1 million life insurance. Nothing goes to the advisor, goes to the person that did that life insurance for you. The only thing that the advisor that show you the illustration created that life insurance for you, the only thing the person makes is a commission that the insurance company, because the advisor is like a middleman between you and the insurance company. You understand? As soon as the advisor brings both of you together, set up the policy, everything goes to the insurance company. And when the person passed away, that's $500,000 or $1 million goes to the family of the beneficiaries. But even at that, if the person retire, the person can still have living benefits depending on the kind of life insurance that person has. You have universal life insurance, you have whole life insurance where you can take living benefit. So it does not have, you don't have, your family and you don't have to wait until the person passes away for the person to be able to access that fund. And secondly, you can even collect policy loan on your life insurance, but it has to be universal life or whole life. You can't get that on term insurance. Term insurance is just like somebody renting an apartment. If you rent an apartment and you want to leave that apartment, the rent you have paid, you're not going to get it back.
So,
because
question
you are renting.
Well,
Let
okay.
me finish. But when it comes to you buying a house where you pay a mortgage, at the end of the day, when you sell that house, you are getting both the mortgage and how your house has appreciated. You're going to get everything back. And even at that, the equity that your house has built over time belongs to you. That's why you have the difference between term insurance, which is temporary, and universal life and whole life, which are different set of life insurance. In universal life, you have two aspects. One is the protection of you, while the other part goes into investment, where you have cash value that you can take out after 5 years, after 10 years, depending on how much you are putting inside the life insurance.
Is there a way for the people that put the money in the insurance to know how much their money is, to see
Definitely.
okay, so
you
you
can
can
access it online.
so you can assess how much you have, right?
Yeah,
And see how much is growing.
it's growing.
Right.
Definitely.
So yeah, so that is a good question. Another question I have for you is your customers, right? What's the minimum income that your customers needs to, like the people that you serve, what's the minimum income and what's the maximum income for the people that you are expecting to like for your own insurance purposes?
The people we educate and the people we assist cut across every levels of income.